Imagine a world where you can secure a loan, earn interest, and trade assets without ever stepping into a bank or filling out endless paperwork. Welcome back, and in this section, we're going to dive into the heart of our course and understand the basics of decentralized finance. By the end of this lecture, you will have a clear grasp of what DeFi is and the core principles that it's built on. Let's start with the definition. Decentralized finance, or DeFi, refers to a financial system built on blockchain technology that operates without traditional intermediaries like banks or financial institutions. Instead of relying on these intermediaries, DeFi uses smart contracts, which we'll go into a bit more detail on later, on blockchain networks to facilitate financial operations with reduced friction. For instance, think about how a traditional bank loan works. You apply for a loan, the bank assesses your creditworthiness, and then decides whether or not to approve that loan. This process can take days or even weeks. DeFi, on the other hand, uses these smart contracts to automate this lending process, allowing you to borrow funds in a matter of minutes without the need for a bank or a credit check. Decentralized finance is built upon several core principles that distinguish it from traditional finance. Understanding these principles is essential for grasping the transformative potential of DeFi. Now, let's explore these principles in detail. Decentralization is obviously at the heart of DeFi. Unlike traditional finance, which relies on central authority such as a bank, DeFi operates on a decentralized network of nodes which don't have a central authority. This can be visualized using the diagram shown. How in a centralized network, all of the nodes are controlled under a single authority, but in the decentralized network, no single authority controls these nodes. They are all individual. In traditional finance, banks and financial institutions act as these intermediaries, controlling the flow of money and data. In contrast, decentralization makes DeFi systems more resistant to attacks and censorship. Since there is no central authority, it's much harder for malicious actors to compromise the entire network. Transparency is another fundamental principle of DeFi. All transactions and smart contracts on the DeFi platforms are recorded on a public ledger, the blockchain. In traditional finance, transaction details are typically accessible only to the bank and the involved parties. DeFi platforms, on the other hand, record all activities on a public ledger that anyone can inspect. This transparency allows anyone to audit the code and transactions, fostering trust and security. Users can verify that the rules of the protocol are being followed without needing to trust a central authority. An example of this is Ethereum's blockchain, which can be viewed by anyone using a block explorer like Etherscan. This tool provides full visibility into all transactions and smart contracts, ensuring that the entire process is open and transparent. Open access is another key advantage of DeFi platforms. They are open to anyone with an internet connection, breaking down barriers that often exist in traditional finance. Traditional financial services often require users to meet certain criteria, such as credit scores or geographic location. DeFi eliminates these gatekeepers, allowing anyone to access financial services. This open access promotes financial inclusion, enabling individuals from underserved or unbanked regions to participate in the global financial system. For example, anyone can create a cryptocurrency wallet such as MetaMask and start interacting with DeFi applications without needing approval from a bank or a financial institution. Interoperability refers to the ability of different DeFi platforms and protocols to work together seamlessly. Many DeFi platforms are designed to be compatible with each other, allowing users to transfer assets and data between applications easily. This creates a more integrated and efficient financial ecosystem. Tools like MetaMask enable users to interact with multiple DeFi applications from a single interface, simplifying this user experience. For instance, you can use MetaMask to manage your assets, participate in lending and borrowing, trade on decentralized exchanges, and more, all from one interface. This level of interoperability enhances the usability and functionality of DeFi. Programmability is another defining feature of DeFi, leveraging smart contracts to automate financial operations. Smart contracts are self-executing contracts with the terms directly written into code. They automatically execute actions when predefined conditions are met, eliminating the need for intermediaries. Programmability allows the creation of innovative and complex financial products and services that operate autonomously. Examples include automated market makers, yield farming protocols, and decentralized autonomous organizations. While programmability enables innovation, it also introduces risk. Coding errors or vulnerabilities in smart contracts can lead to significant financial losses. We'll address these risks and discuss mitigation strategies in later sections. In summary, the core principles of DeFi, decentralization, transparency, open access, interoperability, and programmability set it apart from traditional finance. These principles enable DeFi to offer a more inclusive, efficient, and transparent financial system. Understanding these principles is crucial for navigating and leveraging the DeFi ecosystem effectively. In this next section, we'll directly compare traditional finance with DeFi to really highlight these differences. Traditional finance is centralized, meaning it relies on banks, governments, and financial institutions to function. DeFi, as mentioned previously, operates on decentralized networks, reducing this need for intermediaries. Traditional finance systems often have barriers to entry, such as credit scores, minimum balances, and geographical restrictions. DeFi is open and accessible to anyone with an internet connection, democratizing access to financial services. This inclusivity is particularly important in regions with limited access to banking services. DeFi can provide financial services to the unbanked, allowing someone in a remote village to secure a loan or earn an interest on savings, opportunities that they would otherwise never have. In traditional finance, transparency is limited, and users must trust intermediaries to act in their best interest. DeFi's use of blockchain technology ensures that transactions are transparent and verifiable, reducing this need for trust. Traditional finance transactions can be slow and costly due to the intermediaries and regulatory processes involved. DeFi transactions are typically faster and cheaper thanks to the automation and the elimination of these intermediaries. Imagine sending money abroad using a traditional bank. This can take several days and incur high fees. In contrast, using a DeFi platform like Stellar, this process can be completed in minutes with minimal cost. Understanding these differences is crucial for appreciating the potential of DeFi. While traditional finance has its strengths, DeFi offers innovative solutions that address many of its limitations. As we progress through this course, we'll explore these concepts in more detail, giving you a deeper understanding of how DeFi works and how you can leverage its benefits. To recap, decentralized finance is a revolutionary approach to financial services that operates without traditional intermediaries. Its core principles of decentralization, transparency, open access, interoperability, and programmability make it a powerful alternative to traditional financial systems. By understanding these principles and the differences between traditional finance and DeFi, you're well on your way to mastering the fundamentals in this exciting field. I'll see you in the next chapter where we start to look at the building blocks of DeFi in a bit more detail.